Estate Investing Profits presents Profit Masters with your host, world-renowned real estate coach and investor, Corey Boatwright. Now, strap in and get ready to learn elite wealth-building investment strategies taught by 6- and 7-figure house flipping masters as they reveal their best real estate investing profit secrets to you right now.
What is going on, party people? This is Corey Boatwright. I am your host of Real Estate Investing Profit Masters podcast series and also the founder of Real Estate Investing Profits. How are you today? I hope you are doing well and just getting ready for Christmas, right? Amazing time of the year, one of my favorites, because you get a chance to spend time with family, some of those people that you haven't seen in a while, you know what I'm talking about. And you also get some great food, of course, some of the presents, but also just really taking the time to remember the reason for Christmas is obviously the celebration of Jesus Christ. And so what better way to do that with your family and loved ones? So I love to bring you another incredible episode of Profit Masters here, and it's going to be something different. It's with a friend of mine. His name is Scott Meyers. Now, if you don't know who Scott is, he's not your traditional fix and flip guy or your wholesaler. No, Scott does self-storage, and he's going to teach you today in some of his, what we call our Profit Master investing strategy. He's going to tell you a little bit of how he does this business, but more importantly, he's going to tell you why he got involved in it. He was actually had about 80 single family homes, got involved with multifamily as well, loved the passive income, went up and down just like most of us do in a roller coaster, went through some crashes, and basically asked the question of how could I get some of the benefits of investing in houses without tenants? And he figured it out. And today, Scott has actually purchased over 5,000 units. He's developed and purchased over 5,000 units, totaling over 1 million square foot of self-storage across the country. Just absolutely amazing, phenomenal. This guy is going to really give you something to think about in your traditional kind of mindset of investing single family homes or multifamily. Okay. By the way, have you text the word profit to 38470? Have you? If you haven't, you need to, so you can download the Down and Dirty Ultimate Real Estate Investing Quickstart Guide. We've had thousands of people download it. It's one of our most popular books right now, our guides, and you'll love it. Absolutely love it. So go ahead and do that. Text the word profit to 38470. Also, if you're interested in coaching, one thing we talk about on this interview, many times we ask about the importance of mentoring and coaching. And without fail, the people that we talk to all agree that it's been one of the most important factors in their lives, or they wish they would have done it sooner, right? So what do you do? Who do you talk to whenever you're thinking about having a real estate coach? Well, one program we have is something that has been just really doing well for our students going through it. It is our lightning fast wholesaling program. I'd love to talk with you more about it. You can go to realestateinvestingprofits.com/coaching application, realestateinvestingprofits.com/coaching application, and ask a couple questions there from you, get those answers, and we'll get back with you. All right. So I want to tell you, have a very Merry Christmas and a Happy New Year, right? Make sure you're safe. Have a great time. And here we go. Here is the interview with Mr. Scott Meyers. Scott, are you there, my man?
Hey, I am here, Corey. How are you?
I'm doing well. Let's see. It looks like where are you right now? Are you in, are you in your office?
I am in my home office. One of the luxuries of doing what we do is that, I don't have to go into my office on a regular basis. So working from home today, sure am.
I love it, man. So thank you for taking the time to be on the show. It's incredible to really talk about your story and your journey. I've been wanting to do it for quite a long time.
Mm-hmm.
You know, the last time we saw each other was at McCloskey's event, and of course in Collective Genius, that's we've been seeing each other more. But I want to talk about a little bit of what got you involved as a real estate investor. And I know you're doing self-storage, so I'm really interested to talk about that too. And I know the folks listening are as well. But what got you involved with real estate investing and really self-storage?
Yeah. So two pieces to that. I got involved in real estate back in 1993. I got a job out of college, a real job, and actually had some money left over after paying all my bills. And Dad said, okay, so time to start preparing for retirement and begin looking at investing, stocks, bonds, mutual funds, plowing all the money into a 401k with a company match. And so what I began looking into, however, on my own was to invest on my own, all the ways that I should be investing in the stock market. And the more people I talked to and the more I researched, I realized that, hey, you know what? The richest people, not only in Indianapolis, but also in the world, had not created their wealth in the stock market. They had created it in, go figure, real estate.
Right.
So, I bought all these books on how to invest in the stock market. And then I realized that, okay, I needed to kind of change gears.
Nelson's candlesticks?
What's that?
Did you get Nelson's candlesticks book?
I did, as a matter of fact, and Lynch's book too. Lynch's, all that stuff. Yeah. So I had it front to back, but then didn't really pull the trigger on it too much. And so I started looking into real estate and buying everything I could get my hands on to learn how to invest in real estate as well.
Sure.
And lo and behold, bought my first, got the Carlton Sheets home study system. Yep. And got started in rentals at that point and started buying and fixing and refinancing and pulled the cash out and bought more rentals. And so that became my retirement and then my hedge against the stock market. I continued to plow money into my 401k through my company match. But then 1999, we had the dot-com crash. I was working for a tech company and I watched my 401k vaporize overnight, literally overnight, because my company was one of those companies that was actually cooking the books and got caught up in, the crash. And so when I put pencil to paper, I realized that, I was actually making more money in real estate on an hourly basis, even though it was part-time, than I was making working for this other company. And my retirement was now gone. And so I said, well, I can create wealth and I can create cash flow in real estate, and I can create wealth by having my tenants pay down, the basis. And that is my retirement. And so I decided at that point, we put a plan in place to move out of that. And we did. And so became full-time real estate investors, my wife and I, and moved on from there.
That's awesome. So who was one of your big influences besides Carlton Sheets on investing?
Yeah, probably Kiyosaki was number two, probably right
Rich Dad, Poor Dad. You went through the whole Rich Dad, Poor Dad.
I get it, and only because it makes sense. Right. So I continue to learn from him, and I bought The Art of the Deal by none other than Mr. Donald Trump, President-elect. Right. Yeah, President-elect Donald Trump. And so, say what you want. I've been a fan of Trump for many, many years, and you may not like his flamboyant style, but boy, you peel back the onion and you look at the investor/businessman that he is, and the guy's a man to follow. And so, I look to him for resources, and boy, the list is long. I've spent over $150,000 in my education in real estate, going to different conferences and seminars and trade industries, and every book on the planet virtually about investing in real estate. And so I could go on with probably 25 other names, and just try to pull something from everybody that I can run across or that has been recommended to me, including yourself.
Well, I appreciate that. It's real gracious of you, Scott. I've always seen your marketing, and I saw you next to self-storage, and I really thought, wow, this is someone that's doing something different, not just a flipper, not just a wholesaler, not doing any of the short sale stuff that, kind of that's the era that I went through back in the 2006, 2007. You got the self-storage thing. I'm really excited about hearing you talk a little bit about that. But before we go into it, before you got involved with real estate, before you got involved with investing, did you have a point where what we call is a breaking point where it's like you said, enough's enough. I've got to really go into it. Was it really that .com time when you had your 401k evaporate and just say, I've got to get out of this business and start doing this investing thing for myself? What was that breaking point for you?
Yeah, that really was it, And so, I kind of knew that all along, and I thought that maybe I was going to head that direction. And, like yourself, I was wired to be an entrepreneur. I wasn't wired to be working for a company and in a cubicle. I'm just not I'm not a good employee. Let's just face it. I was not. And so fortunately I was in sales. I had a little bit of a freedom. But then that was, I think that was the pivot point that, God had placed in our life to say, okay, I've been grooming you for this. Now it's time to go down on your own. And if you're not going to do it on your own, I'm going to force you to. And so, when he stripped away all that, then, my wife and I sat down, we put together a 6-month plan to do so. And then I think about a week later, I said, you know what, now that this is sunk in, that we're committed to doing it, I'm going to make it happen now. And by the way, I'm coming home from work today. I've quit my job. So,
wow, you burned the boats like that? Wow.
That was it. Burn the ships. And there was no turning back. And then, went at it full, because at that point I made the mental shift that I'm making more money on an hourly basis in real estate. That's a lost opportunity cost to continue to try to do both. So, yeah, that's what we did. So quit and went full bore. But that definitely was the point.
Did she freak out? She was like,
yeah, she said, yeah, we had a 6-month plan in place. What happened to that? It's only a week into it. And I said, well, told her the same thing. And so then she reminded me, Corey, you'll appreciate this. I don't think you've heard this story. She said, well, do you remember that I'm 6 months pregnant as well at the time? And so, but it all worked out. She was supportive, and it did work out for the best. Now the mother-in-law, when I broke that news to her, not so much, but that's all right. It all worked out well.
The unknown, right? As an entrepreneur, mm-hmm. and particularly real estate investors, it's you deal in this unknown, right? Where there's no ceiling and no floor. And, that's kind of the excitement and the fear that you got to overcome, it seems like daily too, because no one's sitting there telling you when you got to be at work, when you don't got to be at work, so that's the freedom part of it. Then the other side of it is we kind of need to have that discipline too, to go to work, to put in the effort. They joke and say, I know you've heard entrepreneurs are the only people that, work 100 hours a week, right?
Right.
And yet they stay up and they do all this work, and sometimes it works out and sometimes it doesn't. And, in your case, obviously it did work out. So what was it that pushed you from investing in houses? Because Carlton, she never talked about self-storage stuff. So what moved you from, before we get involved with what kind of your strategy is in self-storage, what moved you from real estate investing in houses to self-storage?
Yeah, fast forward from that point that we went full time into that business. I think we had 20 houses at the time, and then we knew we were going to obviously grow and buy more and fix them up, rehab them, refinance, and hold on to them. It was a long-term strategy. So basically, following the Carlton Sheets method, where we would have at some point 30 houses, and we'd hold them for a number of years, sell those off, pay off the mortgages, the balances on the other 15, and live off of that.
Gotcha.
Well, we began to ramp up things pretty quickly after that, and so we had 80 houses, and then but weren't seeing the cash flow that we wanted, and it was all buy and hold at this point. We weren't flipping anything, and so as you probably see where I'm headed with this. Cash flow is the name of the game, and in the rental business,
heavy, right? Scott,
yeah, we were leveraged on all of them. Yeah, right. We were about 75 to 80% across our entire portfolio. Yeah. And so when you have some hiccups here and there, when you have some vacancies, and you have to do minor rehabs and turns on them again, and then the inevitable, the roofs, and anything else, the major capex that you have, we didn't budget for a lot of that because we were living off the cash flow.
Right.
So we thought, all right, well, I need to work a little harder, a little smarter. So we started buying apartments to get that economies of scale. And so we went out and we bought 400 apartment units in multiple complexes. But we found that we were really in the same boat. We still in the same neighborhoods. We were regentrifying these houses, regentrifying these apartments, and trying to turn these neighborhoods around on these projects.
Right.
But at the end of the day, we still had, these folks that most likely wouldn't have home ownership. They were renters at heart. They were probably always going to be renters. And they knew that at the end of 10 months that they could skip out on us, trash the place, and the courts weren't going to do anything about it. And so we were kind of on this treadmill, and I just, realized at this point, if the recipe's bad, even the best cook in the world can't fix it. And so we began to change. That was long about the time then when the administration at that time felt that every person in the United States should own a house, whether they deserve it or not, and whether their credit is worthy. And
if they could fog up a mirror,
they could get a loan.
They could get a loan, right? So now you're talking about what, the 2007-8 year, somewhere in there.
Yeah. It started previous to that, when there was all those loans being, roll all your credit in and buy a house because every person in the country should have one. And so, so they were buying
2005 to 2007 seems like.
Yeah, exactly. Yep. So that's what our tenants were doing, and who could blame them?
Right.
But then we couldn't turn the business model around fast enough to then begin rehabbing them again. But instead of spending $2,000 to $3,000 to get a rent ready, we were spending $10,000 to $15,000 to get a retail ready and to get the higher after repaired values on them. So we robbed from Peter to pay Paul, and started selling some of those off, and we weathered that storm just barely. But then I realized that, hey, the reason why we haven't had the cash flow and why we struggled in the beginning of this is not because of real estate. It's because of the tenants. And so how do I stay in real estate but eliminate all the hassles of tenants and toilets and trash and this broken business model? So
this is interesting. So before you can continue, I find it fascinating. You took Carlton Sheets strategies and you used it as a model, right? For what could work. That was an existing model that worked. And then you applied it, as we're probably going to talk about here in a second, to, I like the model, but I don't like the part the tenants are in it.
You got it.
So how can I continue to get the investing benefits and the cash flow and the things that are positive about investing single family homes and apartments and multifamily without tenants, right? I think that idea probably spurred up something like, is there something out there that exists like that?
We love real estate for all the reasons and everything that it is, right? Appreciation, we can force that by creating value in these things. We get to depreciate this asset, this investment. We can borrow money to buy it, right? You can't do that with stocks, bonds, mutual funds, or gold. No other investment out there can you do that except for real estate. But, the one aspect and the component of it, everybody said, I love real estate investing if it weren't for the tenants, and myself included. And so the next best thing, or you look at then the asset classes within real estate, and it's parking garages, it's vacant lots, and self-storage. Well, parking garages and vacant lots, you can't, unless you're going to develop, you can't really, create value on those. Same with parking garages. But with self-storage facilities, we can move the needle by adding different profit centers, breaking the broken management. You've got multiple units. And so, you and I and many of your students know the power of the cap rate and how, that figures into creating value in these. And so, I was doing that. I was moving in commercial with the apartments, but I thought, okay, well, let's do that with self-storage, but I won't have the hassles of tenants and toilets and trash. And so when I began looking into self-storage, I looked at the fact that it's almost recession-proof, because when things go bad, people downsize, and so do businesses, and occupancy goes up. It actually benefits during a recession. When times are good, we buy more stuff, and so there's a greater demand for self-storage. So it continues to go up and to the right, and then during a recession, it actually spikes. And so from that standpoint, and the fact that when somebody does move out, I sweep it out and move in the next person. So my cost to turn a unit is much less. And if they don't pay, we have the lien laws to protect us in self-storage. And so I put a lock on their unit and I sell their stuff off and I get paid that way. And so as I begin to look into this business
there's a whole show about that, right? Or people lock their stuff up and they can't get it.
Well,
then they auction
multiple
it
shows.
Off. Right.
Yeah. And it works like that. And what they should do, which is, I guess, boring, is, the guy who owns the facility is making millions while those guys are making hundreds, the guys that buy those units and sell them. But, as I looked into the industry and I looked at, what's going on and the parameters and how the business model worked, bought my first self-storage facility and it all came true. And I saw the light, as they say, and then we sold off gradually, sold off our houses in tranches to different investors and then our apartment complexes. And that's all we do is invest in self-storage now. And then, launched our education business then along the way as well. And that's all we do now is I live, eat, and breathe self-storage.
Fascinating. And education, teach people how to do it. One of the best in the country, if not in the world, on how to do it. Certainly a household name for self-storage. Anybody thinks about self-storage, they think about you. So congrats on that. And I want to talk about a little bit of what we call our Profit Master investing strategy, where folks come on and they talk about what's really working well for them. So if I'm involved in self-storage, which I think that, probably very few people are, but probably getting more interested as you start to talk. It makes a lot of sense, right? And I'm graduating more into kind of just where you already been, which is multifamily, closing that first 100+ unit deal, as you heard about recently. And so that's exciting. But self-storage is another thing, right? And so you're always going to have these things out there, and obviously you put the focus on it. What's one of your Profit Master investing strategies for self-storage?
Yeah, I think, our MO through the years has always been value add. I mean, no matter what we do, it is, buying something, a troubled asset and creating value. I mean, we're junkers. And, I'm teaching my kids right now, Corey, the people that get paid the most in the world and will in the future are those that solve problems. And that's what we do, So we find these distressed assets and, go figure. I don't understand why these mom and pops, these landlords, they're not really even landlords, but they're owners of these storage businesses. They just get burnt out, on that business. And, or they developed a 5-acre parcel, but they've only built self-storage buildings on 3 to 4 acres, and they just ran out of financing or just didn't pursue the final build out or whatever. Or they're, they've just fallen behind in technology, and they don't realize that, hey, guess what? You can advertise for units on the intrawebs or something, whatever those are.
that big thing out there.
That big thing out there. Yeah. And they just kind of fallen by the wayside. And so, we know how to find and uncover those opportunities and, get those diamonds in the rough, if you will, and polish them up once we're done with them and create value in those. And so that's been the play all along. But now in recent times, through this last recession, we found, it's a hot commodity. We're in the middle of a recession. Coming out of it, the last one, the banks didn't offer a lot of financing for development because they don't, the banks during a recession, they don't like speculative stuff. You do your song and dance and say, hey, will you give me the money? And say, well, show me what it's done in the past 3 years. Well, I can't. Okay, well, we're not in that business right now. Right. So in the meantime, the demand for storage goes up. So,
and it's a focus on the land mostly. Scott, how much of the emphasis is on the land compared to the development of the structures?
Yeah, it's getting that land at the right price, and then also we're looking at warehouses and bowling alleys, movie theaters, and repurposing some of those as well. So, but you're right. Looking at 5 years down the road when this is all built out. How much is it going to cost? What kind of rents are we generating in the area? And then, reverse engineering it back to a cost for the land and a cost for the building as well. But what we've seen is there's such a huge demand and, there aren't as many opportunities to buy the existing out there because, the owners are sitting on it saying, well, I could sell at the top of the market. But what am I going to replace that with? And so we've had to go create those opportunities. So the strategy, long-winded answer to your question, is still looking for those existing facilities. But in recent years, in the past probably 12, 14 months, has been looking for those the development opportunities and buying the land to develop and buildings to convert. And whether we keep it and follow it through or not, there's also a huge market for the big guys, the regional players, the national players. If we can produce a shovel-ready 5-acre project for them to come in and do their thing or a building to convert, they're paying some crazy prices for those types of things right now. And so we're doing our best to keep an eye on the market and, cover all our bases.
Okay. So what I hear you saying then, reading between the lines, correct me if I'm wrong. As real estate investors, what we do is we find typically the best deals from off-market properties.
Yep.
Right. We find some deals on the MLS, but mostly the best deals are from the off-market properties, from niche lists, probate lists, tax delinquent list, foreclosure list, the high weeds, the list goes on. Right.
Yep.
And move over to self-storage, right? If I want to do a mailer for self-storage, you're finding what I hear you saying is that not just focusing on maybe vacant places of land, even though that could be an option from going to your county and pulling the tax list, maybe showing tax that haven't been paid on vacant land, which is a lot. There's a lot of vacant land that has been paid on. Yep. But you're also saying you're finding the better opportunities from people that already have self-storage units, but they don't know how to manage them.
Yeah.
Maybe they're on a smaller part of an area that they own a much greater, massive amount of land that they're not doing anything with. And so when you're doing those mailers to those folks, you're basically from what you've learned and how in your education part of this, you're teaching folks on the questions to ask those people to find out where. In fact, I don't know. Can you go and like list source or listability? Can you go and get a list of self storage type of a mailer where you can do that? Okay.
Absolutely. Yep. We grab the SIC code and we work with one list broker, and they've kind of scrubbed. There's like multiple subcodes, within the SIC code.
Got it.
And they've scrubbed those out to take out like the gas station that has a little bit of storage or, whatever, the things that we don't want, or like the moving and storage. I don't want a moving business. I don't want a business. I don't.
When you do the SIC code, you do it from the county or from like a list source or listability?
National. 4225. Yep. So 4225 is the SIC code for storage, but it's got like 8 subcategories, and we peel some of those out and we send the list out. Now, what we can't like pre-scrub or get from, our list of databases, like the public storage and Extra Space and U-Store, the big guys, the real estate investment trust. So we'll do that. I mean, we get an Excel spreadsheet is what we get from them, and then we'll take those out. And then, we send out the mailers. It's I'm not a big fan of the yellow letter. We send out a number 10 white envelope, hand stamped, hand addressed. Looks like a letter from mom, and it has a letter inside of it, very simple, with a signature in blue on it to contact us. So we don't do that. We have virtual assistants that do that, but they do it either with an address or return address in the city in which the facility is located or our city. So we get a higher response rate. And that's how we've been, that's where we've had the most luck, is finding those. I mean, we all know it's the off-market deals. It's before, no offense to anybody out there that's a professional in the industry, but before somebody else gets a hold of it and tells the seller that it's worth more because they either want a listing or they want to get a full-blown appraisal or, something. And again, we get a lot of, facilities from our brokers and our professional partners, but we all know that if we can contact those owners directly and show them a way they don't have to pay commissions or just work out a deal structure that makes sense and is flexible, then certainly that puts us in a better position than the norm.
That's a great point. And wow, so that's great. Thanks for sharing some of that, because I want to make sure that I was on the right track, and that makes total sense. So what do you think has been a lesson that's got you to where you are today, Scott? Because you went through, quite a few different hurdles, I'm sure, to get to where you are. What's one of the greatest lessons that you can share that's got you to where you are right now?
Yeah. Let me see. My wife said the first time we were going through financial distress in real estate, she said, "Hey, what about self-storage?" When she heard about it at the local RIA that I used to be the president of, and I dismissed it, saying, "Self-storage? What? Come on, we're sophisticated investors. We have
that's too simple. That's just a box.
Indoor plumbing, and we have carpet and drywall, and we're putting fake granite tops in our apartments, and everything else." And then we went through our second financial distress in real estate when our back was really against the wall, and when 2 months month left at the end of the money, and she says, "Hey, what about self-storage?" And so first lesson is husbands, listen to your wives. You probably, I don't know if you've ever heard that on the real estate show before, but very, very valuable lesson. But at the end of the day, there's lots of them. Here's probably the biggest one, and we've talked about this as a collective genius, and I've kind of honed in on this, and that is the first recession that I went through in real estate, I was a victim of that. The second one, we got out cleanly, but I didn't make a whole lot of money on that. But the next one, and we, depending on who you talk to or listen to, I'm betting on third or fourth quarter of 2017 for that to happen. I'm going to be a big participant, and I'm going to be a player, and I'm going to monetize, and I'm going to profit from this recession that's coming up. So, it wrapped into that is a whole lot of lessons. And I think don't think that what you're doing today is going to make it for the next 7 years, because we go through an economic cycle every 7 years. So, keep cash, set that cash aside, look at what others are doing. We're already seeing in the real estate sector, many people that are selling off, and they're preparing for this. We're starting to see this. So, listen, watch, look for indicators that something is happening in your sector of real estate, no matter what it is that you're doing right now, and be ready to begin to, it doesn't have to be a full 180-degree pivot, but just prepare because I've seen many real estate investors go by the wayside. I'm sure every listener listening to this right now knows somebody in real estate that was a victim of the last recession.
Sure.
And, I mean, the dead bodies are, and the carnage is everywhere still. So just listen to and be prepared for that, because when the music stops, you don't want to be left without a chair. And so, depending upon what you're doing, we could talk, probably for the next 2 hours about, what the strategy is for each and every sector of real estate. But at the end of the day, just be mindful of that, and don't think you're so good because you're making money right now that it's not going to happen. And you need to be prepared for it, whether you think so or not.
The market's the master.
It is always.
The market is the master, and you might think you're so smart, and that market will correct you very quickly.
Yep. It humbles you in a hurry.
Yeah. That's great advice. What if you had to start over again? What would you change? What is some advice for, for some new people, or maybe something you've learned that you really, are thinking, man, if I had to do it all over again, I would do this, not that.
Mm-hmm. Personally speaking, and I think, maybe all entrepreneurs out there have a little of this. I mean, we all have a little bit of pride, a little bit of an ego. Those of us that are type A,
speak for yourself. Speak for yourself, right. Scott.
Yeah, I'm speaking totally for myself. Okay, so maybe this doesn't apply to anybody, but I'll just speak for myself. That's the reason why I went out on my own, is because I wanted to do it all on my own. And that's just part of my whole background. I kind of raised myself, if you will, and I just never liked anybody telling me what to do. And so therefore, I realized I don't want to reinvent the wheel. And, it's good to go out and look at what other people are doing, but I still felt like I needed to change it and put my own little twist on it, or I'm different. So at the end of the day, I've spent, as I just said, $150,000 on my education, but I didn't always listen to that. So if you're not going to take that information and the action steps that people give you that you've paid for, then get a mentor, get an accountability coach that is going to keep you on the right path. And when you set your goals and they're the right goals and they've been approved by somebody else that can look at it in an unbiased manner from the outside, and then listen to that person and stick to it. Because I think so many times that I still felt as if, I'm still going to, everybody else in the market says that, I should be doing X. Well, I'm going to go Y and prove them all wrong and forge my own path. And so just being a little too headstrong, a little, I guess it's cockiness and confidence in myself, but I guess more of a desire to just, do it and prove something to everybody. And I don't have anything to prove to anybody, especially if I'm broke. So at the end of the day, get a coach, get a mentor, and then listen to what they say. And had I done that earlier on, I saw some of the indicators and the financial struggles that I went through in my business and real estate, quite honestly, in life. But I just, I was too headstrong to listen to anybody else, to think that, I could fix this all on my own, because that's what we do as guys, right? We fix it. So you gals listening, you don't have this problem so much. The guys, I think most of us do. So, okay, I'm rambling now. Just pay attention, get a coach, get a mentor, listen to what they say.
It means a lot, because you're speaking, it resonates with entrepreneur. It resonates, whenever you go out there and you're a gunslinger and you're a Lone Ranger and you want to prove everybody wrong. And usually a lot of it is, if you really dig psychologically and you spend a lot of time on why you do what you do, how you're geared up, all the things that kind of happened in your past and all those things. If you spend some time on that, a lot of that is deeper than just you wanting to accomplish X. It's something deeper that you're really wanting to overcome. And, that's okay to understand those things. And, but as time goes on, what you're talking about is you're looking back, where you are now, a successful Scott moving forward. Things are working out great right now. You really have a great understanding of the market. You really have your battle bruises and wounds. And now you get a chance to look back, right? And look back. And the only good reason to look back, I always say, is to bring something positive to your present state. Yeah. Not to go back and feel like the victim, not to go back and say, woe is me. And, but looking back and taking something positive from it. And that's what you're talking about. And really, I think it's great because, looking back, it's like, if I would have just listened to a few of these other mentors and I just did what they said, then I would have probably got to where I am maybe a little bit faster. Maybe I wouldn't have to go through a couple of hiccups. Maybe I wouldn't have had this hardship that I had. And I think a lot of it is distinguishing between people that are for us or against us. Whenever we're moving as an entrepreneur, there's so many people that are against you. It's not going to work. That whole thing doesn't work. Why don't you go get a job? You're smart. You can go do this. Why would you why would you risk this? So it's all about risk and equating that to something of, in their minds, of, not as safe. And so all these people are against what you want to do. But then you get to a place where you start listening to mentors and you start learning, and you don't make that distinguishing part of, this person's for me. This person wants me to succeed. Yep. This person, it's not a zero-sum game. We can both succeed. And a lot of times, when somebody is against you, you feel like it's you against the world. And so when you find somebody and they're teaching you everything, it's hard to go, wait a minute, this guy, I need to be better than this guy. I need to create something new. I don't need to do exactly what they're doing. I need to make my own version of it. And I think it's harder to distinguish that. But I think you've done a great job of really giving a great perspective of what that looks like, because I think it's so important too, is having mentorship. And many of us just don't care. And like you said, we try to fix things and we don't ask for help. Guys don't tend to, again, we're, talking about guys, women, if they're listening here, too, that guys tend to not read the directions, and we just go figure things out and fix things. So it's part of that nature too. But I think that's some really good advice. What's one of your favorite motivational or business quotes?
But you know what? A couple of them I'll mention, but one of them you just brought to mind. I just want to touch on a subject that you just mentioned there, which is, the people that want to keep you down and the naysayers in your life. A big follower of Jim Rohn, and he's, again, we could fill up an hour's worth of his quotes and folks that we follow, and he's one of them. And he mentioned at one time, he said, you need to get rid of, and I'm paraphrasing, you got to get the weeds out of your life, and those are the naysayers. He said you need to take those folks that are the naysayers that are holding you down, and you need to go out and find some different friends. And it's okay. He says, I'm giving you permission to go out and find some different friends, because if all you have are people speaking in your life that are trying to keep you down, usually the reason they're doing that is because they want to feel better about themselves for not wanting to, or having the desire, or taking having the guts to go out and embark upon this entrepreneurial journey. Sure. And they just want to feel better about themselves. And so if you're not surrounding yourselves with folks that already are or have, then go get yourself some new friends. And, take it from Jim Rohn, or I guess take it from me. Scott Meyers just said, here, you got it live. It's okay. I'm giving you permission to quit your friends.
Quit your friends.
You can't quit your family.
I've never heard that way of saying it. That's powerful.
Yeah. So other than that, oh my gosh, there's... many come from the Bible and from Jesus, seeking good counsel and, surrounding yourself with people along the way, and just, listening to that internal voice. Other quotes. Oh gosh, I think this goes along with, and I heard this from a Tim Ferriss, and I think it was Seth Godin who was on his podcast. And it was talking about the fact that we do, many times we do look to so many people, whether it be mentors or people, that are extremely successful in the ways that they've done it. And there are some habits and there's some routines that we can pick up from each of them, but we can also beat ourselves up because so many times they contradict themselves in many different areas where we're looking for guidance. And so don't get mired down in the analysis of paralysis and always looking for that one, quote or that one person that's going to get you, just this and not doing something. Right. So I tend to follow. And so at the end of the day, what Seth is saying is, listen, you look at your situation, you look at your strong suit and where you think your market is going. And then, man up, and if you're feeling this is the direction you need to take, go do it. Stop looking for confirmation for everything and from everyone before you make a decision. And so, from that, take Mark Zuckerberg's quote, which is, we move fast and break things. And so that's something that I've been trying to implement more, because I am, and maybe that's why I keyed in on it, because I am one of those people that I do look for confirmation. I need to be the lead. I am the leader of my organization, but at times I don't always act like it in some of the decisions. I'm looking for consensus from my lieutenants and the other folks in my business. Sure. And I'm realizing they're looking at me to be the leader and to just forge ahead. Let's talk about the logistics of it. Is there any reason why this won't work? Well, if not, then let's go forward. And so I need to begin to move faster and break things.
And break things. I like that. Yeah, I love that quote. Do you have a book that you recommend that's really been one that's just changed your life?
I've got about 10 of them that I'm looking at right here that, are incredibly important. I'd have to say, Think and Grow Rich is still, and it's not here, it's at my office. Think and Grow Rich is probably the one that I've continued to go back to over and over again. That's just one of those that I've gifted many times.
And it gets better the more you read it. Like the more you start doing things, you're like, I'm going to pick up that book, and you're like, it makes sense now, right? The whole mastermind concept, the whole, yeah.
And it's playing itself out, and that's the wonders of working from home is that you get that background noise as well.
That's all right. What's your dog's name?
Also, Michael Gerber, the E-Myth.
What's your dog's
that's played out.
What's your dog's name, Scott?
It is Noodle.
Noodle.
Yeah. It is a toy Labradoodle, I think, is what it is. It's the kid's dog, as I put it.
Right. That's funny. So you're talking about Dan Kennedy. You're talking about Michael Gerber.
Michael Gerber and the E-Myth. I mean, that continues to play itself out in my business now without even knowing it. We create systems for everything, and systems run the business, and we manage and tweak the system. Kiyosaki, as I mentioned once before, Jim Collins, Good to Great. I continue to revisit that over and over again. And gosh, I'm trying to think of anything else. I'd love to say that I could that I have this mastered, and I don't know if you've shared this with your listeners yet or not, or if you've implemented 100% in the business, but
traction
it's here. And so we're going through core values and, everything in our business top down. And so 2017, is the business that, or is the year that, the business is going to put its big boy pants on, and we're going to, we've been professional for a while, but now we're going to go even more professional and really take a look and a deep dive into each area of the business. And that's going to be our kind of our roadmap for doing that.
That's great. Yeah, that's good. Those are great books. Do you have a favorite mobile app that you use? Are you more of a techie, Scott, or not?
Yes and no. Yeah, you know what? I mean, I love Uber. Uber's great. I'm going to talk about the fun ones. All right. TV Food Maps. It's an app where it tracks all of the restaurants that have been on the food shows. And so anytime I travel somewhere, I pull this up and, focus in on the, diners, drive-ins, and dives, or,
cool.
Best thing I ever ate or hot.
iOS?
What's that?
It's called TV Food Maps. It's on iOS.
TV Food Maps. Yep, it's on iOS, and so I can go and find any of the show or the restaurants that have been on any of the shows, and so we have a blast with that.
That's great.
Of course,
I love that.
It's fun. Sure. Slack, Slack's on the phone. Skype is on the phone. I mean, I don't know why it took me forever to just put Skype on my phone and use it as an app and just talk. I mean, I got VAs in the Philippines. And it's just like, I got to wait till I get back to the office. And I just realized I can just Skype, on the app. So I think those are those are probably the basics. I guess I'd have to look. I don't know if there's anything else earth shattering that I've uncovered recently.
What do you use every day in your business?
Man, oh man, just Google, and, Infusionsoft for just about everything, that we do, and everything is on the phone that I can use.
An app now? They have an app.
What's that?
Does Infusion have a mobile app that's good?
Infusion doesn't have an app. That's a tool that I use, pretty much every day, but that is not an app, but everything else is on there. And so, as I'm looking through these things, everything else is just, kind of on a, on-demand basis, but those are the main ones that are on the front screen. That it's just communication tools. So it's Slack and having Google Docs, my Google Calendar in place. I use Airmail. I'm a Mac guy, like you, and so I use Airmail instead of Google Mail. Those are the main ones.
I like it.
That's it.
I like it. Yeah. So, do you have a morning routine that you kind of stick by, or do you not have one?
Oh man, yeah, it's rigid, and if I travel, I get all thrown out of whack. So. Alarm set for 4:09, and I get up.
Wait a minute, 4:09, Scott?
9, yeah, 4:09. So I get up, I come down.
Before you go into, how long have you been doing the 4:09?
For 16 years.
Oh my God!
So I heard a gentleman who was at the Walk to Emmaus closing ceremony, and he said that he began doing this morning workout routine because he was doing it in the afternoon, and he was eating it into his family time and his wife's time with him, and so he decided to start doing it in the morning. And I was always that noon or afternoon workout guy time, right. And so I flip-flopped that and begun that process 16 years ago, and really haven't deviated since then.
Okay, so 4:09, you get up. What happens?
4:09. I go downstairs. I got a Bravo, big monster, super duper deluxe espresso maker, and I'll whip up an espresso. I'll take a cup of that, walk outside for about 15, 20 minutes, have my little gratitude walk, a little time with God, head to the gym. They open the doors at 5 o'clock. I'm in and out of there by usually about 6:45, and then I land at my desk, whether it's here, whether it's at my office, whether it's at Starbucks or a meeting, usually somewhere around 7:15, and start the day. That's the morning routine.
That's the morning routine. Wow, 4:09. That's some discipline.
It works. It works for me. You know what? But if I don't do it in the morning, I'm fooling myself in the afternoon because life and everybody else has hit me up for something and I just can't get away. But at 4:09, at 5 o'clock in the gym, nobody's emailing, nobody's calling. I don't owe anybody anything at that point. So that's my time.
Right. I like that. Wow. That's some crazy discipline. I love that. Do you get 8 hours of sleep?
That's why I need this in the afternoon, however, to get me through.
Have a big old monster drink.
Whatever it takes, right?
Probably got 80 grams of sugar in it. No big deal.
No. This is the 0-calorie sugar-free, mind you.
I see. The 0-calorie sugar-free. Okay.
Yeah.
All right. Hope that doesn't like die 5 or whatever in it.
No, it's all clear. It's all. It's my one vice. I don't have one every day, but we're gonna start working on getting that out of the diet as well.
I gotcha. Well, what's do you get 8 hours of sleep a night?
I don't. I require very little. I'm probably 5.5 to 6 hours a night. Yeah. How about you?
I'm about that. I do my very best to go to bed before midnight every night, but it is so difficult for whatever reason. I don't know if it's just
you're the night guy. Mm-hmm.
And then I get up, pretty early too, and so I usually get in, between probably around like 6. If I get more than 7.5, I feel different. I feel like it's like it throws me off. So I'm somewhere between that 6 and 7 mark.
Yeah, good.
Yeah. So, what are you most grateful for, Scott?
The grace that I'm afforded by everybody, my maker and my family and those around me, because I mess up a lot. And, there's times when I still break things, even if I'm not moving fast, and it's just out of stupidity or ignorance, and the grace I get, I'm thankful for. I mean, many times that, we've fallen and failed in all kinds of things. And, I'm just thankful that I have supportive people around, and then also people that forgive me. Otherwise, these big egos that entrepreneurs have can be kind of fragile at times. And so I'm thankful that I get a good support team around me.
I like that. That's it's important to just be mindful, of those things. And sometimes it's easy to take them for granted. So what point, we talked about this a little earlier, but what point would you recommend someone actually hiring a mentor for their success?
I mean, the easiest answer is probably sooner than later. And, sometimes it's a result of budget. But I can tell you that, a good mentor, a good coach in life or in business or in real estate, will keep you from making a big costly mistake, and will pay for themselves, or they'll just move you in a direction and help you achieve that success much faster. And in that sense, pay for themselves. And so I think anytime that you're at that point when you've got some burning questions, or you're not moving forward either at all or not as fast as you would like,
right? And
your own paralysis, or just, I don't know what I don't know, is keeping you from moving forward. And you've asked all your friends, you've, gone onto the free blogs and forums, and you still can't get a straight answer, or a bunch of stupid answers from other folks that are less experienced than you.
Right.
Then it's time to put your own big boy pants on and man up or woman up, or and pay for a mentor, pay for a coach who's going to get you over that hump and grow your business. I think you'll find that an awful lot. And, we can use all the analogies of, Tiger Woods has a coach, and, all of those that people use all the time. But at the end of the day, it's true. You look at all these successful people out there, they've got coaches, they've got mentors, they've got lieutenants running their businesses that are smarter and better than them. I don't know it all, and I never pretend to. I'm always going to hire people smarter than me to tell me what to do or handle things that I shouldn't be handling. So the sooner the better.
One of the reasons that you're successful, you're following what Richard Branson said, which is hire great people instead, get out of the way.
All right, guys, this is not staged at all. Corey and I did not talk before this, but I have this taped to my computer. I don't know if you can read that there. It says, would Richard Branson be doing this? So
I love that.
Anytime throughout the day, when I'm doing these stupid little tasks and these items that I shouldn't be doing, when I can have a virtual assistant or one of my staff members doing this, I have to, remind myself to say, okay, I need to stop and give this to somebody else. I've got, bigger fish to fry, and I got an organization I need to lead, and I shouldn't be doing this stuff.
Yeah, and to speak to that, because obviously, you and I both do coaching, and one of the things that with entrepreneurs, and we do it too, is that, you do these activities in the day, and you want to do it because you can just get it done now, right? You just want to get it done now. So making the phone call, whatever, it's going to take more time. Something else is going to come in, and then it may not get done. So the fear is it may not get done, and you can get it done right now. Well, there's a change of mindset that whenever you send off the email, whenever you make the phone call for the voicemail or put it in your Todoist or whatever, or Evernote, or whenever you task it out, that is getting it done. And the mindset is a lot of times is that that wasn't getting it done. But as an entrepreneur, you have to think that if it's a $10 an hour activity to a $100 an hour activity, those things are not things you should be focusing on as the business owner and the visionary. You should be focusing on the $1,000 to $10,000 hour activities, which is what your note obviously reminds you of. And so I think it's a lot of a mindset thing. Is that instead of getting it done now, you doing it actually hurts you instead of helps you. And it's just a way to change the way that we think. So that's so important. I love that you say that. We get
here's a little
bogged down in those little tasks.
Oh my gosh. Well, here's a little nugget that has stuck with me that a mentor of mine told me many, many years ago. And he's got a lot of virtual assistants to run his business. And he says, here's my mantra. He says, if I'm 15 minutes into a task and I haven't gotten it done yet, because of what you just mentioned, because I'm going to do it better anyways, and I might as well just knock it out now. I need it now. Then, he immediately stops. He takes the next 10 to 15 minutes to explain what he needs to have done, and then he sends it off to somebody else because he'll probably spend more time trying to figure it out. Yes. And 9 times out of 10, that's also a task that'll come up again. It'll be repetitive. And if he hasn't already offloaded it to somebody else now, then he'll be stuck with it again, and he'll have to go through this. And so he says, I'll send it off once, tell them what to do, and then we'll have a system in place, and that person will be in charge of it, and they're, they'll be tasked to do it. So I don't have to face it again, because we're going to continue to do this over and over in our organization. Or even if we only do it one other time, I save myself 15 minutes. And that's at the end of the day, we're getting minutes back, right? Said our last speaker in Denver.
Yes, right. The seconds, the minutes back. You're buying back time. People say you can't make more time. You can buy back time.
Yes, you can.
And it's cheap. It's cheap what you can buy back time for in relative to what you're focusing on and what your real worth is at certain places in your life and what you're focusing on. And as well as other people, what they pay you to be focused on too. And so, I love that. There's we have a video training library for our business. So each individual part is a video of what to do. And that way, if someone leaves, they have a video. And on top of that, you can use a company or service. It's called Sweet Process, sweetprocess.com. Essentially, it creates these, it's a template, or it's a format for you to use, so you can create these standard operating procedures and put videos and put things inside there, so you can have those things ready to be done. And a lot of times, like you said, it is a residual process. Something you're doing now probably is going to come up again, and training that person to do it now will just, I love to be able to get something. I want to learn how to do something once and never do it again. That's my kind of that's the kind of thing that gets me excited. If I can learn it one time, and sometimes you don't even have to learn it all the way, but if you want to have some intelligence on what it is you're thinking through or whatever, but learn to do it once and then delegate that thing. And in fact, we talk about it in our coaching. We talk about EDC. It's eliminate, delegate, and create. Right. And there's in business, there's always those 3 things that you're constantly thinking about. So, to speak to what you're saying there with this something that Richard Branson be doing, I mean, you just focus on the bigger ideas, and he lets people take care of those smaller things.
You got it. Yeah.
So what's a way that, if you had, there's a lot of things going on in your life right now, right? You have a lot of success. If you had to summarize it, why do you do what you do? Why do you get up every single morning at 4:09? What drives you, Scott?
Yeah, I was, I guess I'm one of those guys that's kind of born with an internal drive. And part of my growing up, as I mentioned, I kind of raised by myself, if you will. And so maybe looking for gratification. So I always want to, I don't know, I measure success by things that I've accomplished and not looking for accolades or anything to feed the ego, but just, so that I can see internally that I've achieved something, whether it's in the education business or on the investing side of the business. I kind of born with an internal drive. But more recently, that has changed. And so, thinking a little more, I'm going to be 48 in a few weeks here. And so thinking a little more about legacy, and love to have my kids come into my business at some point, but I'm not banking on that happening. However, just always wanting this to be the best it can be and getting these systems in place and creating a business that's now creating jobs for others. But also, like you, we're a mission-minded business, and even more so these days. And we've been donating to International Justice Mission and just a number of organizations. The Caring House Project Foundation down in Haiti with Frank McKinney and building houses down there. But more recently, so cool. Our own company, we've been building houses in Mexico and the Dominican Republic through YWAM and Homes of Hope, Youth with a Mission and Homes of Hope. And so this a month ago, was the first time that we built a house essentially where we took a whole crew. We've gone on these trips, then we paid to our way to go and be a part of a build and pay for a portion of these houses. But now our company is paying for the whole thing. And so we're paying for the house, we're furnishing it, and we're paying for our staff and our students to come and do this as well. All they need to do is get a plane ticket to San Diego or the Dominican Republic, and then we take care of the rest. And so we started tithing corporately 3 years ago. So we take 10% of our profits at the end of the year, and we put it into a fund, and then we will go build as many houses as we can build from those profits. And then we take those folks along with us that are maybe introducing them to missions for the first time, or just to experience that. And our hopes is to go out and create, leverage that and create more folks that become more mission minded and incubate missionaries out into the marketplace. So just realizing, what can happen when your business is blessed, and also that you have a greater purpose. So, sure. Really taking to heart, reading Pastor Rick Warren's book, 40 Days of Purpose, and just realizing, okay, God saved my business and me from going into financial turmoil twice now, and realize that there's something greater out there. And since we've realized that it's not my business anyway, and that there is a greater purpose, we've been obedient to that. Sure. And so even when I'm having a crappy day, it's really easy to look back on the people that we serve and realize I'm not having that crappy of a day. But also, I've kind of got a responsibility now. I put that out there. It's on our website, and the people that I speak at different seminars, and our students and our investors, our equity partners, they realize it's a big part of our business. And so, I kind of need to keep that up now, not just because I put it out there, but I feel that obligation. And there's a whole lot of people that are counting on me and our business to succeed. And so if we can build one more house and allow those kids in that house to go to school where they wouldn't be able to because the government won't fund it without a house, then we're breaking that cycle of poverty one family at a time or one kid at a time. And we're going to continue to do as much as we can as long as I have air in my lungs and the business is producing profits to do so. So that's, it's both a matter of internal, but a little more than that these days.
That's so powerful, man. Congratulations to you and the drive to do that. It takes a lot to be able to get there and to put your focus there on the bigger things that often sometimes it's just giving. It's giving back and figuring out ways to help. One thing you mentioned there is you have a rough day, and then sometimes you're thinking, I don't have such a rough day. A lot of times that has to do with switching one word from I have to do something to I get to do something. We talked about, I get to do these things. I get to stay home. I get to have these challenges. I get to have these things to figure out. And just changing one word and sometimes change the whole perspective. So, well, is great. What's a way that we can get in touch with you if someone wants to learn about self-storage, if they want to email, or what's the best way to get in touch with your organization if they want to learn more about this self-storage investing?
Sure. You know what? We got a big house. We can have everybody over for Christmas if you want. We can
some eggnog. Right?
How many people are listening to this? 4 or 5?
At least, right?
If you Google Scott Meyers self-storage, you'll find me. But the website is selfstorageinvesting.com, and pretty much everything is there. We give away a lot of free resources, and also if you follow the menu bar on the tabs up top, there's a way for our equity investors to get into touch with us if there's anybody looking to do some passive stuff.
Nice.
We educate, we invest. If you want to be part of some deals, either way. We'll show you about the business. You can get involved with our investments any way you want to, and again, we'll learn you about the business and the reasons why we love it so much. And we're looking to create some partners out all across the country, and we're buying all across the country. We're very active. We just closed 2 weeks ago on a facility in Florida, which I'm a part owner in. I'm also a third owner in a parcel down in Tennessee that we're going to develop a facility in, getting ready to close on another one in Kentucky. And so, just all over the country, our students we're teaching them how to go find these deals. And then we're helping them get to the finish line. And not in every case, but in some cases, we're partnering with them on these deals. And so that's how we're leveraging the two businesses. And finally, really getting to the place, Corey, where I'm simplifying it. The education business can be 60 hours a week, and the investment can be 60 hours a week. And so we've backed off on a lot of the education, but focusing in on people that are serious about it, teaching them how to do it, and then marrying that with the investment business. And we get to, like you said, we get to do this now. I get to teach people, and then they become partners, and then they really become family. So we're in a good place right now. I've
heard that about with your organization is that folks really feel close together. It's not just transactional, it's more relational. And that's the longevity of, on creating something that lasts, like that. So I love the vision that you have for the company. I love what you're doing. I think it's going to be really exciting in 2017 when you said, really start to look into the business and getting clear on some of the traction principles. I think that's going to be incredible. So thanks for taking that. And I know your time's valuable, so I really appreciate you taking the time to be on here, share some of the things that's worked and some of your wisdom, the ups and downs, some of the sources and strategies, and your heart too, what you're doing and what you're most passionate, grateful, and your big why. So thanks, Scott.
My pleasure, Corey. We need to do this more often.
Absolutely. Well, thanks again for taking the time to be on here, and make sure that you're on our next Profit Master Investing podcast here, because we bring on folks just like Scott that are leaders and that are crushing it in their investing strategies and their investing niche, and look forward for you to be on the next one. So that is it. Thank you again. Remember, be a servant. Thank you again, Scott.
My pleasure. Thank you, Corey.
All right. Bye now.
Bye.
Hi, this is Corey Boatwright, and I have a quick question for you. What is the fastest way to reach your goals? Is it to work harder, work smarter, use system and processes, or hire rock star employees? What about just making more money? Actually, it's none of that. Those things are a byproduct of the one success component that every real estate investor or business owner that I know all have in common. And the answer is clarity. Complete laser focus on what you want, why you want it, and what are you willing to do to get it. So where do you find clarity? By hiring a coach and mentor. Now, could you reach the level of success that you want to achieve by doing this all on your own? The Lone Ranger. Well, maybe, but do you think it would take you double or even triple the time to achieve it compared to hiring a coach and mentor to help guide your path, provide proven instruction with a tailored blueprint that you could follow for building a real estate business that supports your lifestyle and helps you reach your financial and personal goals? Absolutely. Here's the fact. Time isn't recyclable. So I would like to ask you to make good use of it and extend a personal invitation for you to book a phone coaching strategy session by going to callwithcorey.com. That's callwithcorey, Corey spelled CORY.com. I'm going to ask you a few quick questions on that page, and we're going to go over and see how we can make sure that your business is on path to reach the goals that you want this year. So go to callwithcorey.com, that's CORY, and book your phone coaching strategy session today. Remember, be a servant, and I'll see you on there.
You've been listening to another Real Estate Investing Profits Master Podcast series. To receive your free real estate book, Down and Dirty, Ultimate Real Estate Investing Quickstart Guide, how to quit your job to start flipping houses in 90 days or less, head online and go to realestateinvestingprofits.com. And don't forget to follow us on Facebook at facebook.com/Real Estate Investing Profits. Thanks again for listening, and stay tuned for our next episode.